So markets have opened up this morning in a positive way with absolutely zero news that would suggest that there's any change in anything going on. This is not unusual after this huge sell-off of the last 3 days. I would expect choppiness. We'll talk about that more later. We also have Tesla, which has been was up in the pre-market and then actually opened up down with the regular market opening and then is now headed greenward. We'll see where that turns out at the end of everything. We'll check that also in a few minutes. Well, this is from Gary Black this morning, which would encourage people, I think, to be buying this morning. China has reported another strong 12,500 insurance registrations for the last week. And after 5 weeks of the third quarter, Tesla China is now plus 39% quarter over quarter and plus 23% year over year. And this continues to be Tesla China's best start to a quarter ever. Boy, if we were plus 23% worldwide, we'd be having a great year. We would be seeing completely different stock prices now. But China continues to be a bright spot. All right, and then in responding to that very same thing, Tesla fan Metal says, he says, I see quarter three trending towards 475,000 vehicles on continued strength in China. And of course, he has been very, very accurate on these kind of predictions. Ars Technica, now, okay, so if you want to know why Tesla could be down this morning, it might be all the FUD and all the TeslaQ nonsense this morning. I felt like it was important to just talk about a couple of them here. So first of all, what happened to my mouth this morning? Ars Technical is out this morning with an intentional hit piece on everything Tesla this morning. It questions whether cars will ever be automated. It wonders aloud why you would even make an industrial robot in a humanoid form. How silly. You make them to fit the situation. Why would you make a humanoid? It's crazy. Anyway, so here's a quote. The lack of attention to the company's core business is starting to become evident. Tesla's product lineup is small and increasingly elderly, with the exception of a niche pickup truck that is only road legal in North America. Price cuts have stopped sales from declining, and the company's profits are shrinking quarter by quarter. Wow. Well, let's see. I guess they hadn't noticed that there was a big refresh on the Model 3. They haven't met nothing about the 3 cars that are coming out next. I don't know. What are you going to do? Anyway, the beat goes on with other TeslaQ folks. 𝐓𝐿 actually, he's not really TeslaQ. He owns a Tesla. He owned a previous Tesla. He's normally a pretty good writer, but this morning, the Tesla specialist, anyway, this is Barron's, 𝐓𝐿. Lazily writes this piece this morning. He says, the gain this morning is the carry trade around the yen. What gain? First of all, well, of course, he was writing before the market opened, so he thought there was going to be a gain. Didn't turn out to be a gain, but he thought that the entire thing was about this is about a 6-paragraph article, and he says everything was about the carry trade. I don't know if you listened to my program yesterday, if you read anybody else's analysis of yesterday, but there was a lot more going on the last 3 days of the stock market than the carry trade. I don't know, something about job numbers, something about manufacturing numbers, something of, I don't know, just, I agree. The carry trade was one element, but it was certainly not the entire reason for the stock market meltdown yesterday or anything to do with the recovery of Tesla this morning, which wasn't recovering. Well, it might be now, just for fun. Let's look mid-session just to see what's happening. 93 cents down as of this moment. Okay. Then Business Insider, who loves nothing better than to do weird hit pieces on Tesla, provided a story from a random, unknown employee. I mean, we're talking about, they don't ever name this employee. It's a single employee. They didn't go do any additional conversations with any other employees to find out if anybody else agreed with this guy. I mean, it doesn't say he's an executive. It doesn't say that he has any special knowledge. It just said that here's why he quit. My decision to leave Tesla came down to a lot of different factors that have been slowly creeping up on me for a couple of years. If I'd had a better commute, he talked about having a 3-hour commute because Tesla changed the job that he was in, or if he had a job that I liked, well, that's a good reason to quit. I might have been able to shrug it all off and tell myself, no matter what crazy stuff Musk is doing now, I'm just going to put my head down and keep working. But with the layoffs, it all came to a head at once. I wasn't happy with what I was doing anymore, and I didn't feel like I had faith in Musk's plan for the company. Wow, Business Insider must just be completely devoid of ideas of anything original to do. I mean, an unnamed, maybe imaginary employee who, holy mackerel. Anyway, oh, he says, oh, I'm sorry, I didn't finish. Maybe you don't want to hear this. Choosing to leave was really difficult. I put my whole life into this job. I moved 3 times and worked at 5 locations supporting 35 sites. Yes, he's such a sad man. Anyway, then Reuters, Reuters, this is a major news source. Tesla to fix 1.7 million vehicles in China, says market regulator. That's the headline. Now, if you happen to click in, oh, I know, you already know what it's going to say. Oh, yeah, over-the-air update. And it's the same trunk lid issue that everybody covered last week, 2 weeks ago, whenever that was, for other headlines of 1.8 vehicle. I mean, holy mackerel. Come on, guys. Oh, well, in a much happier news thing, Figure 2 is out today. I'm going to wait until Scott's regular time to do a full review. I think that gives us both time. It gives me a chance to see what other people are saying, to do my own analysis, gives Scott time to also do the same thing. He'll have talked to everybody else about it. But I think it's better to wait until tomorrow morning, and then he and I will go over it kind of nut by nut, bolt by bolt. But let me tell you something. Let me give you something in general about how I'm looking at the humanoid space. How often do I report on the competitive cars in this space? Like, not very often. Why is that? Well, Elon has said it, and I agree with him 100%. It isn't about the competition. Especially in Tesla's case, it's not about the competition. It's going to be about what can Tesla make, what kind of vehicles can it make, what kind of bots can it make in terms of what the market is looking for, in terms of price, in terms of cost, in terms of manufacturing excellence, in terms of being able to go to scale. Those are the things I care about. And I think, Figure 2, he may turn out to be a great product, and they may sell a lot, but I don't do the job for them. I'm not covering them. I'm not covering humanoid robots. I'm covering Tesla. I'm covering Elon Musk. I'm covering the markets, and I'm covering the economy. So I don't really look at these competitors as much as I want to know what is Tesla doing. All right, but anyway, let's just take a look at the specs. I'll just give you the specs this morning. So it's going to have 6 cameras. They say that the new one has a 50% increase in the battery capacity. It has 3 times the CPU and GPU. It has new hands that have 18, I think, degrees of freedom. It has integrated wiring. It has an exoskeleton structure, and it has speech-to-speech reasoning. Now, the last one is the one I care about the most. As you probably know, I think that is going to be key. And Brett Adcock says the same thing. He says the ability of the robot to have a normal conversation with another human is going to be the big deal, and I agree with that, along with, of course, the ability to do the work. The video that I watched thus far didn't show any new jobs. It didn't show any new use cases. Maybe I missed it, but we'll look at it in detail today. And yes, I'm sure that this will be part of what Scott and I talk about tomorrow. This is Randy Kirk. Please hit that like and subscribe and notify button. We will probably have Brian White later today, unless there's some breaking news. And then we have Nick Gibbs on Tuesday night helping us explain what exciting and happy things happened today. And of course, all the rest of the news too. And in particular, the markets. We have 𝐅.J.Magorno participating in Patreon now. He joined on the Patreon side. Thank you, RJ, for that. And it would be wonderful if a few more of you wouldn't mind supporting the channel that way. Okay. I'm also got an interview later today with Terry Keeley. Look up that name. Go ahead, just Google Terry Keeley. you'll see that this is a complete change maybe in the possibilities for how this channel and how maybe the overall coverage of Tesla and the economy should work in our world. Terry is okay. Yeah, he's an internationally respected. Well, he was a major. Well, yeah. Anyway, he's written a couple of books on the economy, on ESG. He's written one on sustainability. He was just on the Peterson show. So he's a guy of a very big substance, and we're going to be talking about some stuff that I don't normally talk about. I think you're going to find it extremely interesting. Tesla Larry says this morning about the economy and about the markets. He says, for all of those rushing to buy the dip, please be wary. He reports that Nick Colas, who has worked the market since before the 1987 crash and through many, many others, puts it quite simply, even if this bout of volatility is brief, the bottom may not be in for a few weeks, I would say, or months. He also says history shows us that sell-offs of this magnitude tend to last 3 to 4 months. He says the same thing. August and October are two of the most volatile months of the year. Also, to add a few words of Larry's own, he says this is going to be an especially volatile period with a momentous election just 90 days away. You may have heard that apparently Kamala has made her decision with regard to the VP pick. And sadly, it appears that the Democrats had to run away from a Jewish VP option. From the 𝐏𝐲𝐬𝐞𝐬𝐝 letter this morning, just in, central banks have conducted 35 rate cuts over the last 3 months, exceeding the Q1 2024 levels. Global central banks have been cutting interest rates at their fastest pace since the 2020 pandemic. Now, 𝐏𝐲𝐬𝐝 always likes to compare things to previous periods when there was trouble. Anyway, over the past 25 years, the most cuts were seen in May 2020 when global rates were cut 92 times. By comparison, during the peak of the financial crisis, global central banks implemented 76 cuts. So you can see we're nowhere near those kinds of numbers. World central banks are cutting as if a global recession is starting. Yes and no. I think that they're cutting for other reasons. I think they're cutting because they believe inflation is under control. This is the problem with 𝐏𝐲𝐬𝐝. I like his, so much of what he brings to the front of our mind is good, and then his analysis is sometimes just a little bit off. So this analysis is okay. I think that we might be going into a global recession, and we do tend to cut going into recessions, and sometimes when inflation is stalling out and going down, that is a recessionary issue, and that is certainly probably the case this time, but that single line is not enough. There needed to be more on that. Okay, Market Watch this morning. Thomas Solopek, who is the head of cross-asset strategy at JP Morgan, says the answer to that $1 million question is no. He says the full ingredients for a market bottom are not in yet, and I agree with him 100%. First, he says it is a legitimate pullback, which is confirmed by widening credit spreads, the Treasury yield curve steepening, and the outperformance of the utilities that we saw last week. XLU over the broader market. The same things that hurt other sectors, such as a slowdown in economic growth, are disinflation, cutting into margins, help the utilities and other defensive sectors, which benefit from lower interest rates. The growth outperformance of the second quarter suggested an economic slowdown, while the third quarter defensive leadership suggests growth risk. Solopek also dismisses the more upbeat view of the labor market data that suggests the rise in unemployment rate reflects labor supply increasing. If so, one would expect unemployment to flatten and not keep picking up as it has. Though Hurricane Beryl did complicate the most recent numbers. I'm not buying the Hurricane Beryl business. Since the next jobs number is a month away, he says, investors have to turn to technical and risk-based signals, and they're not flashing a bottoming signal yet. For one, the stocks don't bottom when the VIX is closing at highs, though it should be noted that the fear gauge dropped sharply in the early hours of Tuesday, and it dropped sharply yesterday as well. The slope of the 20-day moving average also does not offer resurgence, and he says getting above that is a minimum starting point. Also, the put-call ratio often hits highs at market lows. Goes on to say the percentage of stocks above their 100-day moving average for the NASDAQ is 34%, and we would look for this to get to 20% before watching it closely. The percent of stocks at a 4-week low similarly is nowhere near the 60% in earlier corrections. He adds he'll be closely watching the American Association of Individual Investors Sentiment Survey, which sent a strong signal in the fall of 2022 when sentiment was worse than the trough of the COVID crisis. He suggests looking at the longer run in history of these bottoming signals during market corrections, we find that a number of the indicators mentioned show up together, and seeing a confluence of these help pinpoint for the best time to re-enter. For now, he said, remain underweight stocks and wait for things to get bad enough to signal a capitulation. Nothing about what happened the last 3 days was capitulation. We have not seen anything close to that yet. I'm thinking, I continue to believe we're going to get to 20% down on the S&P and the Dow. We'll get 30% down on the NASDAQ. That's the time. If you've got dry powder, that's the time. If you're looking for the bottom, that's the time to start jumping in, because I don't see any. There's nothing I see. Not a single signal, not a single piece of economic reporting. Nothing suggests we're going to go below that bear market cutoff into something much worse. So there you go. That's what I think. What do you think? Let me know in the comments below. All right, let's take a look here at the markets. Tesla is now down 282. So what we're looking at so far this morning is a very choppy, not unexpected for Tesla, for Apple, Google, all choppy, Amazon, all choppy. But what we have, interestingly, is we have Meta up 15 points this morning, and Microsoft up 6, and NVIDIA up 3. So a mixed market, but we're seeing a strong recovery now in the Dow, up 439, the NASDAQ up 157, the S&P up 67. So the Tesla's choppy, and other than those Fudster articles I read, believe me, I saw nothing else out there to suggest any reason for Tesla to be off this morning. Percentage-wise, we have got the Dow Jones up 1 full percent, NASDAQ up 0.96, and the S&P up 1.31%. We have got the Magnificent Seven also completely mixed with a little, some down, some up. That's what mixed means, right? But for instance, PayPal up 3.59, ARKG up 2.17, CRISPR up 2.58, ARKK up 1.55. So very strong up, Square up 1.40. So interesting market this morning. Very nothing consistent, and in particular Tesla and Apple both following, and Google following a weird pattern of being down, then up, then down, and all in slightly in the red. I'll look at this, of course. Oh no, this is the end of the program. Oh my, I have to get more sleep or something. Okay, so let's go ahead and take a look at the rest of the markets. Here we go to the bonds, which also have been acting a little weird. The bonds are actually rebounding this morning, or the yields are rebounding this morning. That means people are taking their profits from yesterday with a significant run up in the bonds yesterday, with the yields going way down. So we got the 10-year up 5.7 basis points this morning at 3.839. That's still, in solid 3-point, territory. But the 2-year up 7.3 basis points, broadening the yield spread to 1.2%. I'm sorry, 12 basis points to 12 basis points. Yeah, to 12 basis points. I got to do this in my head, by the way. Okay, and then the 2-month is only up 0.3 of a basis point, but again, it's 140 basis points difference, or at least. Anyway, so that is just continues to be nonsense. But the 2-year, 10-year is the more interesting thing, in that yield spread went positive yesterday morning and now is back to negative. All right, let's go ahead and take a look at the oil business over here. Oil's up 49 cents this morning, 73.43. That, still very, very low. Brent 76.69. About the normal spread between those two. Natural gas up 1.75% this morning, but still under $2. Gold down another 10.50 this morning, $2. I'm sorry, 2,433. That's really significantly down from the 25 and change that it was not that long ago. Silver continues to be well under 30 and dropping 0.04%. Not much drop this morning, but at $27.20. Copper up a tad this morning, back over $4 a share. That would be interesting. If copper starts going back up, we may have misread the recession, but I don't think I'm misreading it. The dollar is rebounding against the yen this morning. So pretty much what you're looking at right now, after I've gone through all this, is you're getting a correction on all of what happened over the last 3 days. So people are finding opportunities to buy or to either buy in the spaces like the equities, where there was a big drop off and now they have a chance to buy low, and you have other people trimming their gains where they had good gains. So the dollar is up against the yen and down against the euro, which is the opposite of what we've been seeing the last few days. Okay, then you got Bitcoin. Let's see, again, same thing. Bitcoin up 2,955, almost 3,000, 5.56% at 56,111. Now that's still obviously super low compared to the 74,000 it was not that long ago, but it is just one more piece of evidence of what we're talking about. Okay, so last thing we do is we take a look at that Tesla again, still down 3.61 right now at 195.27. But again, I think what we're going to be seeing over the next days and weeks is we're going to be seeing more downward activity unless there's some massive change in the economic news that would change all of that. All right, last chance to put in that notify button, because you got Brian White later today. We had a phenomenal second show lined up for you, and then Nicholas tonight. And then I'm not sure where I'm going to slot in that Terry Keeley interview. Once we have the interview, I'll decide where to put that, but it will be over the next day or two. Look him up, seriously. Just Google it right now and see who Terry Keeley is. I think you'll be impressed that he's coming on my little show. Yes. All right. So it's been great, as always, talking to you.